buyback of TCS has opened today. Before I come to you, let's also run our viewers through the details of the buyback. Now, the buyback will obviously close on December 7, which is next Thursday. And let's first understand the basic details of the buyback. As you can see on your screen, it's a 17,000 crore buyback, and the company intends to buy back nearly 4.2 crore shares of 42 million shares at a price of somewhere around 4,150 rupees per share. Now, retail investors, the investors, with an overall investment of less than 2 lakh rupees, they have been assigned an entitlement ratio of 1 share for every 6 shares held as of the record date, which was November 25th. Now, this works out to an entitlement ratio of about 17%. This means if a retail investors wishes to participate in the buyback, they can only tender 17% of the entire holding, whereas other investors, those in the general category, have an entitlement ratio of 2 shares for every 209 shares held. Now, we have prepared an example to see if the buyback actually makes sense for a retail investors, which again, remember, are your small time investors with a investable amount of 2 lakh or less. So, let's say you wanted to participate in the buyback, and in the buyback you bought somewhere, you bought the shares on November 24th, the last trading session before the record date. On the day, TCS was trading at an average price of somewhere around 3,450, meaning that you can buy up to 57 shares to qualify for the retail category. The math is pretty simple. You simply divide the maximum investable amount, which is 2 lakh rupees, and divided by 3,450, the closing price of November 24th. That works out to about 57 shares. And at an entitlement ratio of 17%, you can pretty much tender back 9 shares for the buyback at a price of 4,150. Now, this brings our net invested amount for the remaining 48 shares to about 3,318.75 per share, meaning if you had invested in TCS just to benefit from the buyback, the prices have to stay above 3,318.75 for you to make a profit. Now, this gives us a headroom of about 3.8% or so. Now, interestingly, in the last 3 out of 4 buybacks, the stock ended in the red 1 month post the buyback. Only in 2020, the stock had surged about by 6.5%, as you can see on your screen. And this was on the back of a broader rally that was playing out in the tech space. So, Kranti, coming back to you, I mean, doesn't seem like there is a much of a, return for retail investors, much to participate for in this buyback, is it?
Yeah, Suyash, you rightly mentioned, but if the investors want to take that advantage of this buyback, whatever be the minuscule advantage is there, they can participate. But one good thing is always the company is quite strong. Okay, it's a bellwether IT bellwether company with a strong pedigree. So when they tender in the buyback, if that goes through, but one need to buy this stock again, the open market, the secondary market, they can accumulate the stock for a longer term basis. Because one of the key theme is when most of the investors, when they tender the stocks in the buyback for the short term, the gain and the opportunity they have in the medium to short term, they tend to miss the long term opportunity of these stocks. So one need to have a very staggered and a long term approach here. Just it's not a company to just to tender their shares and forget. Okay, it's a company to hold on in their portfolio, which gives the safety and stability to the core portfolio of investors.
Now, Kranti, TCS has bought back nearly 83,000 crores of equities in the last 4 plus this buyback. Do you think that perhaps there is a lack of opportunity for the company?
So yeah, it's not the question of lack of opportunity. The promoters are one of the primary participators in the buyback. At a group level, the Tata Sons have been deploying their money and increasing their capex in the various companies at a group level. So this is the reason for the buyback that's taking place, because this is one of the key cash cow for the entire group is concerned. And as seems to be there is enough cash is there on their balance sheet. They have been doing this activity. As there is a significant opportunity that clocks to the company, they can go for some kind of organic or inorganic growth. They
Hmm.
can definitely do that. But in the meantime, at a group level, okay, as they need a lot of cash requirement towards the promoters, the Tata Sons, so we can see these frequent buybacks that have been coming for TCS is concerned.
All right. And another question that I had was, would it be more beneficial for the shareholders had the company given a dividend instead of conducting all these buybacks?
Because of the calculations works, they know better than uh, how to how to get the cash from the company. So this is the reason. Okay, the frequent buyback offers are coming because of the lucrative nature or the advantage of for tax is concerned with respect to the buybacks are concerned at this point of time.